So Mr. James, are you ready to buy this house?
Of course, I am ready to spend all my savings in it, so that I can have a lovely place to retire without any worries of tax, inflation, and of course poverty.
So, Mr. James, I have decided to buy your land. Since you spend your whole life in it, I will give you the best price that no one can give.
Finally, after years of spending my savings and pensions, I can get the reward of my life. I will be able to be financially free and enjoy my remaining life in Las Vegas. So how many millions are we talking about?
15.
Holy shit, 15 million. I am a millionaire.
$15,000.
What, $15,000 for the house I spent my whole life on, and you're saying $15,000?
Actually, which stock market going down and the value of your land is worth pennies, this is the best price. Take it or leave it.
Well, I can't complain now. I wish I shouldn't have spent all my savings, which were millions, on this house. Now I need money, and I think now this is what I can have. Mr. Lois, seeing that the market is booming, the construction work will soon start here. I think I can't leave this house. I will pay $4 million for this.
Well, I think 4 million is a bit less. We are talking about billions of investments that will come here. I think the minimum price should be $10 million.
Well, I think I must take the risk. So deal.
So you're saying that the house you bought from me for $2 million 42 years ago sold for only $15,000?
Well, I think it was a good decision not to take the risk. The land was worth in pennies and I already spent millions on its maintenance. So I think it was a wise and secure decision by me.
That house sold for $10 million. Imagine having lots of cash. Private island. Luxury car. What could go wrong? Except if you don't know the difference between asset and liability. First, we will look at the basic definition. In financial accounting, an asset is any resource owned or controlled by a business or an economic entity. It is anything that can be used to produce positive economic value. A liability is defined as the future sacrifices of economic benefits that the entity is obliged to make to other entities as a result of past transactions. In easy words, liability is something that you will continue to pay for the rest of your life, even after buying it. Things like houses, car can be called liability. But in contrast, the asset is something that will generate revenue in the future. So a good question is, how it is related to being rich and poor. Let's say you get a job with a $100,000 salary. How are you going to spend it? Buy a house or a car? If you think this way, then you are poor. Why? Because not only you will buy them, but you will also spend millions of dollars on these things in the future. The most probable thing will be that you will take a loan to buy this stuff. You should also not forget the tax that you will have to pay on these things. In the end, you will be left with nothing except for the debt. If you think that saving money is good, then don't forget about the taxes on it. In comparison, asset is anything that pay you in the future. Like the house that was a liability for you, could also become an asset, if you sell at a higher price or rent it out. It is true that the difference in becoming poor and rich is because of knowing the difference between asset and liability. Now we have explained to you the basic points of liability. In our next video, we will explain the assets. We hope you like our content. Share and subscribe for more of this content.